shares. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman on this first day of February. My pleasure to be here. Tuesday, we're looking at the Dow down 123, giving back some of the huge gains over the last. Actually, we have to think of it as the past 2 days. Really big. Down at 35,000. I said subscribers, I think that 35,000 area. That's kind of what we're watching here as key support. Maybe even the 34,950s. But right as we're speaking, this is the moment that the market should try to find some support. And it's done very much what we wanted to see a day late. In other words, Friday was a huge update, but it had pulled back sharply so that it didn't even close above the Wednesday high. But then we broke yesterday into leg B. This is a gray leg B. Why do I call it gray in the Chapman methodology? Until you get a buy signal. And it's usually, it could be at A, it could be after a peak A, it could be after a peak B or a leg B. But you need to see a couple of things happen, and we haven't got those things happening yet. So we're looking at the Dow in leg B, gone above the Chapman wave inside track. Let me just make sure that I've got drawn this correctly here. A little bit messy. I don't like messy charts, so let me just do that. Move it to the side. Here we go, up. Yes, I missed that top. Got to get it exact. Always wonder about other systems. Do they hit it exactly? Oh, okay, there it is. That's better. Conservatively, we went right to the edge of the trend line. Now I want to be a little bit more aggressive, and I'm going to say, unless the Dow in the next 2 days is able to, doesn't have to break above, but it has to show enough strength, follow through in this leg B, because after B, usually in a move like this, off a takeoff move from a low, you kind of expect to see maybe just a 1 day dip and then another new high, and then when you get to C, you can start to stretch out. So that makes the 35,390s kind of an area that I want to see taken out decisively. That's already 170 points, 150 points above where we made the high today of 35,228. So let's do that. Now, one of the reasons why I wanted to spend just a moment, a little more longer on the Dow, is because the mix of the Dow at this particular point is still saying to me that it's a really good mix in the overall market because it's got value, it's got growth, it's got cyclical, it's got financial, it's got everything. So, and we're looking at the MACD hasn't crossed positive. The histogram's been improving. I love that. I'd like to see it go to positive. The stochastic's lousy at 45%. It needs to get to the 58 to 62%. And the on-balance volume is really deteriorating. But that is also because the look-back period was so severe in the pullback that it takes a little while for on-balance volume to really trigger some kind of an up move that's noticeable. And the weekly chart says 35,283. This is going to be really important to change the sell signal in the weekly chart to a potential buy signal. We'll see. The day is young, the week is young, the month is extremely young. And we're looking at the Dow monthly. Yes, it candle kind of saved the day as it ran over the last week and a half. We'll see what happens, but make sure that within the context of what you're looking at 3 time frames, daily, weekly, monthly, for your charts, because it's really important right now. S&P spent a bit of time there. Now I'm onto the S&P. S&P, same kind of story. MACD hasn't crossed positive. 9-period moving average is way below the 14. Stochastic is 38%. It's not very good. And the 9-period moving average is very weak. It's going to take a lot of effort for this to climb to the 50-period moving average at about 45.80. It's at 44.96 right now, down 18. And that's going to be very important. And then if it gets to the 45, if it gets to the 40, it has to go all the way to 45.60 to go above the 9 and 14 weekly EMAs, and the technicals are quite poor. So a lot of expectations here. The candle that we see Oh boy, I don't want to mention this, but I have to. It has a lot of the characteristics. The wick is just a little bit too big at the top, but otherwise it has the pattern that I call the Chapman Wave Roman candle, the red candlestick, a Roman candle at the highs in the monthly chart. Oh, all I can say is that I wouldn't be surprised. We've got a rally coming, but this month is going to be really choppy. Make sure that within this particular pattern, a close on a daily basis below 44.22 would initiate the cautionary moment that says, be careful, you could go all the way back to 4222.62. Yep, the low of the 24th of January. That's why the move up now, getting into the body of this monthly candle and into the weekly candle, pushing towards the 45.90s is going to be so important in this particular move. Now we've got something that we need to look at. The question came in over the weekend from a subscriber. What about the monthly chart of the QQQ? Well, what about that candle? It is an ugly candle. Yes, it has some of the characteristics of the Chapman Wave Roman candle, but usually it has to close in that candle itself. You get a tiny little wick at the top. That's where you light the fuse for the Roman candle, and then a huge decline, and then a close halfway or greater from the bottom, leaving a long wick. This is not quite that, so it makes me suspicious to say the selling is over in the Invesco QQQ Trust Series Index 100. I don't think so. This is going to be a very important rally. We're going to see how all the areas of the former big leaders in the NDX 100 type stocks, how they do going into Wednesday afternoon, Thursday morning. That's even perhaps more important than the weekly close, because it's going to tell us whether or not there's follow through on some of these big moves to the upside, or there's a breakdown. Talking about that, I showed subscribers, this is a very interesting thing. Keep your eye on the left side chart. Let me just go grab a couple here. I had it all written down. Let me see if I can find it. Yeah, just have a look at this left side chart. That's the daily chart. Have a look at the pattern. Just lower lows and lower highs, lower lows and lower highs. Just constantly. No rally could be sustained. Plug. This is EV. Plug. Look at that. From that peak D that was made. That isn't even the high. But that was the last important high of 45 something or other. 45.50. Look at that. Just underneath the 14 and the 9-period moving average. Finally, yesterday goes above. Today tries to rally and it fails. Look at MJ. This is the harvest, alternate harvest cannabis sector. Same thing. Down, 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 down. Can't close above once it closed above the 90 MA and then it just gave it back. No, the 14-period moving average, and then it gave it back. Now it's testing that 14 moving average at 10.03. Look at, what did I want to show? I wrote it down. Oh, this is so fascinating. In any area, it doesn't matter, because chart patterns follow. It's like a fractal, and the characteristic gets repeated over and over again. Look at this. You can tell me what this is. Look at that. 14-period moving average from the high PP also back in near the 14 level, now trading at 4.74. This is 23andMe. All the same patterns. I'll be back.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. Basil Chapman Dow is now only down 32 points, down 27 points, coming back nicely. S&P is only down 12 points after a spectacular two-day run to the upside. And just a couple of questions about what do you do with your portfolio for subscribers? I don't want to give everything out, but we've kept our core positions because they held up and they went to the 200-period moving averages. And I think this is a nice potential takeoff for them to go back up. Not all of them. I think a couple of them. One's acting really well. It's very high priced. So I decided not to give it as an ad for subscribers. Instead, I decided to do something else. So I'm really mixing things up here because I need to find out the durability, the sustainability of this rally with the VIX index, if I can type it in the right place, VIX, with the VIX index having made a high of 38.94 on the 20. Was it the same day? Because the December market low was not the same as the VIX. That was 35.32 on the 3rd of December. Yep, it was the 24th. 24th, I should put the date in. 24th of January, it goes to 38.94, and now it's down at 24.57. I think that was a significant metric in terms of both emotional and the tactical side, in other words, the price point, having gone above the 35.32, when actually the news was worse. We had the COVID, we had the Fed, we had inflation fears that December 1st. This one was more Russia, and Russia is just sitting out there. You know something's happening. You know the day that it happened could be the very day that Putin has a meeting with one of the leaders. You never can tell, right? So that's just something you have to say. Let's watch other things. We can watch crude oil. Crude oil is now down 27 cents at 87.88 after 3 days ago making a new recovery high in the continuous contract at 88.84. And I've been saying that we're looking at these 4 or 5 sessions where the crude oil has not been able to break out, but look at the way it's held. But my suspicion is we're just ready for a little bit of a dip. Let's move on to areas that are fitting. We'll come back to the other market. Look at this IYT, a huge move up, 7 points to 265. This is the too many words. I, shares, Dow, Jones, transportation, average index fund. Give me a break. Whoever invented that? Look at this triple top right here in the 280, 187, 287 area. So I'm watching this very closely. It's a very nice move. Why? Is it UPS or Federal Express or something? Oh my God! Look, so UPS up 25.45 at 227.67, trading yesterday at 200. So it's up 12%. Now, is this an old F? Oh no, it can't be, because it broke the low of the 2nd of, oh, this is fantastic, the 2nd of December, where it had a low of 193.82. The low yesterday was 192.74, 190. It took it out. So this has to be a brand new move. No matter how, even if it fails, it has to be called a brand new leg A to the upside. And in the weekly chart, F/C, in the monthly chart, you finally got your leg D. Goes from the 82 round number low back in March of 2020 to a high today of $231. I would say $82 to $231 in a big cyclical stock like UPS, United Parcel Service shipping. That is spectacular. And that is a big positive. That's one of the reasons why I've been wanting to add. We've got long positions. We've got our core positions that we're still holding. I want you to go back to that one stock that we've been in, and actually a couple of stocks we've been in and out of. I love them, but I just had to have money management. So we're not in that, but we have got some others. We picked up something today. I have no idea. The day is young. Whether or not the two positions we got in this one particular ETF, whether it's going to hold. One of the reasons why I wanted an ETF that really is broad and kind of covers all the big stocks that would be breakout stocks in 2021, and then break down stocks going into the low of last week, is because I just wanted a generic, and now I can, for subscribers, pick individual stocks. And if this works, at least we're in, because this should do very well in the shorter term, because it covers so many of these huge stocks. Now, let's go back to where we were looking. We're looking at gold. So gold is pulled back a little bit from the high. It's up 5. I just think it's stuck in the range. It's not breaking down. It's not breaking up. It's just stuck. And now you have to go to individual gold companies, gold or silver companies. Silver is also stuck in the range, so that you're almost independent of the index itself or the commodity, the core commodity. I think that's really important. Look, silver could try to get to above the 9-period moving average. It failed yet again underneath this trend line support. So it's just stuck. It's looking much weaker than gold. But if I'm talking about that, I want to add the dollar, and the dollar. Everything about this looks like that was a D. There's no way I can count that as a D. It is a C, and yet it's given it all back. It's gone back into how important are rectangle formations. Oh my God. How many times, how many sessions over the years have I spent talking about the magnet of the middle of a rectangle formation? You can do Fibonacci, you can do any technique, TD9s, you can do whatever you want. The pattern says until you break out and hold above the resistance, the repellent zone, or you pull back and hold below the propellant zone, you are just stuck. And that's the way you've got to treat it until there's a breakout. And that can last a lot longer than your patience. All right. So now I've got a couple of questions coming in because we're looking at commodities. We'll go to Vail. Morning, Basil. Will you take a look at Vail for me? I have a small position at 14.02. Nice. And I'm looking to add a second position. What do you think? Thanks, Greg. So, yeah, this is now a leg B, 15.95. Leg B will be over 15.95. I like this pattern, but the 200-period moving average is so potent that what I would say to you is, look what happened. It stuck around when it broke and below back in August. It went below 18. It tried to go back. It gapped down at 9 reversal, went back, and then hugged the line, hug. And then the 9 was still way below the 14-period moving average. It was just too much, and it collapsed, and it went all the way from the 18s down to the low that was made on the 18th of November at 11.16. That started peak A, peak B, peak C. 3 peaks C, C1, C2, C3. Then it goes to D and E at 16.40, and then it pulls back. You're in at a great position, but now you can see what's going to happen with the 200-period moving average. In fact, I'll draw in the rectangle that says it's stuck here for a little while. However, because of the move today, the day is young. If at any point after 3 o'clock, this touches 16.01, that'll be terrific action. It says the lowercase h has gone to a cup formation, and 16.40 would be the target. And once it starts to go there a second time, it's taken that 200-period moving average and it says, you know what? I'm going to try to turn you into a propellant line rather than a magnet. So yes, now what's written is based on 15.94. I'm sorry, yeah, 15.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. The time flies when we're having this show. So let me just, I need to go back for a second just to say Belay, which does iron ore, pellets, nickel, copper. I mean, this is just it's an amazing company. When it gets going, it really gets going. Ferroalloys, etc. I like this. This is kind of in the area that I think is important. But I did want to just mention that if it goes under 15.40, 15.20 support, it could make an H pattern and hang around a little bit longer. So this is, I would say these two sessions are really important for this particular stock. Why? Because as long as it doesn't break that 1540 level, because if it goes sideways, that's okay. It's just the magnet of the 200-period moving average. What you really want to see is at some point, it has a little push into the 16s, and then it closes above 16 today. That would say to me, leg B in a brand new move, possibly. That's nice. The MACD's okay. It's not great. Stochastic's weakening at 53%. On balance volume is very good. And that 9 above the 14-period moving is your benchmark. That's the one that's saying, as long as it sticks in that area above the 14-period moving average, so far, so good. A couple of questions came in as well. Would I look at PFE, which is Pfizer? If you have a long position in Pfizer, and it's a longer-term position, I am a little concerned. It made a peak F at 61.71 in the daily chart. I am concerned that that's also an alternate. I'm keeping it just for the moment as an alternate account in the weekly, but I did not want to see this particular rally pull back under 52, and it's at 52.67 right now. So what I'm going to say to you is, if this is a position that you don't want to mess around with, you're either in or you're out, that's really tough for me, because the way it looks is it's stuck sideways, but it's probably going to do a lot more testing of the 50 to 48 area. And then it could have a spec. You never know. Pfizer is a fantastic company. Yep, they make mistakes every once in a while. I think this is the reason why it's pulled back here. But it had made a peak E in this very long-term chart. Look at this, using Chapman wave inside track repellent zone. Look at this beautiful trend line. I mean, how easy is it for you to draw a trend line? And if you're looking to draw a trend line, take that trend line and see if you can do the Chapman wave inside track, like 3/16ths of an inch, or even the 16th or an eighth, just a narrowed channel that goes in parallel motion. That's what a channel does. And then see what happens when it gets to the resistance level. Look how it pulled back. This is a long term. This is going back to 2015. This is actually going back to 2009. This is when I drew it. And who would have known when I was drawing it in right there, that peak E, if I extended it out, and you can do that with TradeStation, you just take it and you say, extend right. Who would have known that 8 years later, 9 years later, almost 9 years later, that was January. So almost 9 years later, it would hit that trend line, actually 8.5 years later. It would hit the trend line exactly and then be repelled. So if you're looking to raise cash, and this is part of a portfolio where you say, in the long term, it always comes back. What did I just do? Please, please, please. That's a monthly chart. I hope that's the one. No, wrong. Hey, I don't know what I'm doing. Okay, I'll find it. In the long term, Pfizer always comes back. It's just a great company. I'm talking about just a long term. But if you're trying to raise cash, I think this is a place that you could take half off. You can make the decision whether it's half or more. But I would definitely, if you're raising cash, that's different altogether. Let me just find my monthly chart. It'll pop up. Give me a second here. Weekly. There it goes. A monthly chart. Is that the one? Click. Nope. Let's go again. Oh, it is. There it is. So we're back. All right, that's what I meant to hit. Oh, that's what I meant to. Oh, I dragged it. That's why. I didn't click on it. Here we go. Click the left side. Whoops, there we are. We're back again. Everything's back to normal. So, yes, I'd say you could take profits and just use that money elsewhere, because I think it's stuck in a range between maybe 56 to maybe 57 on the upside and probably 48 to 47 on the downside over the next 2 months. We'll see what happens. A question that came in about Exxon Mobil. G/B, what a spectacular move today. It did come out with earnings, or we knew the earnings would be good. This is an amazing stock. Just a month and a half ago, it was at 57, 58, 59, 60. Whoops, it's at 79, hit 80 today, 80.41. Leg C in the weekly chart, leg E in the monthly, fabulous. These oils, multinational oils, are doing just fantastically. How's our old former MRO doing, which we got out of? Oh, there's a nice move to the upside, but it hasn't made a new recovery high. Marathon Oil, lovely action, up 96 at 20. Oh, did it also have earnings, or is earnings coming out? I think earnings are coming out today or yesterday or tomorrow, coming out, MRO. Okay, next question. Oh, wait a minute. So Exxon, what was the question? Exxon, what do I do now? What you do is, because you asked the question, it means you're just a little bit nervous. Take a percentage of your nervousness. Let's just say you're 5% nervous, maybe 15% nervous. Take 15% off. It's a fantastic stock. Money management says sleep at night. Sleep at night means whatever the percentage nervousness, if you take off, you've got a gain. You can say, you know what, I'm going to take off whatever percentage it is here, and I might even split it in two. And over the next 2 months, if it comes back, yesterday it was in the 75, so it has to go lower than that. If it hits 73, a 10% correction, I'm putting that money back. You could decide what to do with it. But if you're nervous enough to say, what do I do? I'm saying, look, the on-balance volume says it's really close to some kind of a pullback. It doesn't have to listen to the on-balance volume, but that's usually what happens when it's overbought. But the stochastic at 90%, XOM, trading at 80.14, up 4.15, up 5.5% in a multinational. Do you know how much, to move a stock with billions and billions as ExxonMobil multinational oil does, this is a big move. And the MACD still hasn't turned down, so it would be early. I'm just saying, take a little bit off to ease your question to say, yeah, is this where it takes a... No, and that's number one. Number two is, congratulations. You got capital gain plus a dividend, a great dividend. I missed this out. I've been talking about it for ages. Didn't get in for subscribers. Upsetting, but it's okay. We've made up in other areas. So next question is, I think I missed some of the questions. XLE is the S&P Select Energy Spider Fund. Looks like Exxon, doesn't it? It just powered right through that resistance at the 200-period moving average in January, and now February has gone even higher. This is the monthly chart going to all-time high of 99.73. I suspect over 2022, we're going to get real close to at least the 78.82 area. I don't know about that high. I've got a left side, right side price time match. I don't want to measure it right now, just to say it's on my list of really sectors that are in vogue. And Fugo, in the very first part of 2022, but we are in leg D in the daily chart. We're only in leg C in the monthly, just like Exxon. So XLE energy looking great. I the whole thing. I want to take it off. But back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
If I need to go in order here, so what we're looking at is Viacom trading at 34.06, up 61 cents. I like this. See this gap that was there around about the 18th of January? You see the way it's filled at peak A, and now it's leg B. I should make this a gray B. It's not yet confirmed as a buy signal to buy mode. It definitely, if the MACD cross is positive, it'll probably go immediately from a buy signal to a buy mode. I love when gaps are filled like this, but this is early. It needs to trade now above the low that was made on the gap low the day before, 33.67. So it's trading at 34.09. If it doesn't have to be 2 consecutive days or anything, I just want to see it start to trade, turning that whole 33.60, 33.50 area into a support, and that would be really important. But if it can go into the body of this candle right here, the candle of the gap down day before low, so on the 24th, that middle part would be 34.47. Let's go to 34.50. If it's able to touch 34.50, this weekly chart, and I'll do this if someone reminds me, I'll do this tomorrow. Oh, Victor in Paramus. Let me go to Victor before I forget. Sorry, Victor. Hi, Victor. How are you?
Yeah, good. I just want your opinion on 2 stocks, PLTR and RIDE. I'm going to get back to work. I just want you to go over them because I think they might be at a good buy point. They might be winners this year.
Okay, so you know that we've been through this before with Palantir technology software platform. Remember, we were way back. We were talking about it. I think it was in October. It was just messing around, and then it started to break out. And said it was it even earlier? And I said if it manages to rally a little bit more here, then it could have a better rally. And it really had a nice rally. And then it had this plunge from the 27 area. It just went right down to the 18s, didn't hold the 18s, and kaplop. It went right down to the low of, even 3 days ago, the low was back in the 11s, 11 and 12 area. So this I like as a, Victor, if I say a trade, I mean it's only a trade using a trading stop, because it has been decimated from the rectangle formation that it had made going for months, going from the 30 area down to the 17 area, almost cut in half. Then it stayed in that range, and then it broke down to the downside. The doji candle of last week is the first sign that says this is a rally that percentage-wise could have a nice move, but I wouldn't get carried away. So are you in the stock at all?
No, I'm in it at a higher price, but I'm long term. You know what I mean? But
okay.
I want to nibble at a lower price. You know what I mean?
I'm going to say to you know my rule of thumb that if you're in a trade that goes wrong and then you turn into a long-term trade, the moment comes back even close to what you were at the original price. My rule of thumb, and as long as I've stuck to this rule, it's just been the best thing that I could do, is I get out and that's a loss or a gain, a little mini gain, I say, thank you, trading gods, for getting me back. And then it could be 3 minutes later, I could buy it, but mentally I'm now in a fresh position, and now I've got to stop that. Believe me, I do not, that is the stop no matter what happens. So now I'm going to say, you asked me a question, I'm going to separate the question from your psychology. I'm saying if you're looking at this fresh, it has to be a complete, I have nothing to do with your other trade. What I have to do with is right now I'm saying at 14.04, it is not a great stock. It's not one of the ones that I'd be looking at for a really nice upward move, but it is one on a percentage basis that can go from 14. It could try to tackle the 15 area. It could even maybe touch 16 in this move if this move can last a little longer. So I would do this. I'd start a small position here at 14.02, but I would, the low today is 13.56. That's almost a point away. I don't know if I'd give it a point, but I would say 13.70 would be my stop on the session. And if it manages to rally and tomorrow it actually touches 14.35, I'd raise my stop to say I'm guaranteed a profit. And then I'd say, do I want to add? What do I want to do? But please, this is a separate, this got nothing to do with your previous trade. This is asking me a fresh question. I'm answering it fresh. Because you have to think of it separately. This is not your catch-up trade that says, I'm going to make up all my money. This is the trade that says, this is a chance that I could get right. You could get a nice gain. Let's just do ride quickly, RIDE. This is also, this is EV. This is in the electric vehicle area. So
the truck's coming out, just so you know. They're actually making it. Them and Foxconn. It'll be out later this year.
Okay,
no
good.
Fake news
But
on
this
one.
at $3.07, this is a way better chart, but not in a daily, but the weekly and monthly, you say, oh my God, this is terrible. So on a pure trade at 307, here I would do a different thing altogether. I'd say you can start a position right here at 306. I would have I have to have a stop, because if this breaks under $2.80, and these things move very quickly, it could make that H pattern and it could just stall. So it's got to move right now. 307, if intraday it starts to move to 310, 311, 312, I'd raise that stop accordingly. Whatever the stop is, I'd raise it. As it moves up, I'd raise it penny by penny to the upside. And what you really want to see is that Wednesday, it doesn't close under 287. But in fact, it tries to get to 316. If this thing can get, if there's just a sudden buy program on this, and it can actually hit $3, and that's just way too high. The high of the 12th was $3.39. Now, $3.19, that's going to be a sign to say, you know what? It's getting a little bit more momentum. More people will start looking at it. That's the way I would look at it. But longer term, all I can say, they have to come out with an incredible product, because this is a chart that says the company could go broke.
Yeah, no, they can't, because Foxconn gave them the money and they bought the other half of the factory out. So basically, Foxconn's building their trucks now. But they hate them because, Ford's getting pumped by Kramer. You know what I mean? And also, don't you think the plunge protection team went in there and saved the market again? Don't you think the plunge protection teams have been holding this whole stock market up? Once they leave, they seem to come in at like 10:30 in the morning. And what about the end of the month and the beginning of the month? After that buying zone, where do we go?
Yeah, I don't think they all going away. They're in the background. One way or the other, they'll figure out how to hold the market up. But your thing right now is that you've got, Ride is a stock that has gone from $30 down to the $2.27 area. That is a big hit. So think of it as almost a counter trend trade, that you're only trading on a percentage basis. And then I would say to you, if you raise your stop, let the stop take you out and then start all over again. I don't think this is a buy and hold at 309. But I do think it's a nice percentage trade. Okay? Thanks for calling, Victor, and good luck.
All right, thank you. Have a good day. Bye.
You too. So, folks, let's just do this. I had a bunch of questions here. Let me just go through those as well. DBA, that's what I didn't even see this. DBA is at 20.47, up 28 cents. This is the DB Agriculture Fund. We're in from the 13s. It's at 20.47. This is now either a leg an old leg E or a brand new leg B. It is fantastic because it's broken to a new high, a recovery high. DB Agriculture at 220.48, up 29 cents. That's the reason subscribers know that I want you to get into a stock today that's in the agriculture business. And
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Got a lot to do here. Let's just go right to it. 47.95 SAVA. This is Cassava Sciences Biotech. Had this on my list for subscribers this morning to say I like it, but I chosen something else for a different reason. The reason why I like this is that arch formation. It came back, it broke the left side low, but look what happened. The MACD was way more positive. Stochastic gave a really nice under single-digit turnaround. Now it's at 44% so quickly that I thought that leg B that started yesterday could extend, and it's up 3.65 today, 8%. We didn't get it. I mean, I didn't put it in as a buy, but I love that pattern. So that was a question. MOS, let me just run these quickly. Oh, Goldman Sachs, first of all. MOS, the Mosaic Company, potash, phosphates, fertilizers. That's why DBA is so high. A very good action at 42.63. I think it's going to go towards the 44. If it can close above 44 on the weekly chart, that really improves even the monthly chart, which is already in leg D. That's number one. Goldman Sachs, I like Goldman, but it needs to. You remember I was talking about the gap a moment ago. It needs to fill the gap. I like other brokers with a better chart formation. I would say, yep, Goldman Sachs as a trade, but at 358, I'd rather choose one of the lesser ones. I mean, Schwab, we don't have it now. We had it, unfortunately, got stopped out. This is acting better. It's not great, but it is acting a little bit better. It looks a little bit better chart formation. So that would be my choice. Questions. Long-term doing here. CF, yep, CF is actually now it's working out very nice. Elizabeth. Look at that. 74.77 was the high on the 28th of December. It's trading at 73.81. This is in the nitrogen products. I love this before. It's acting so well at 73.80. CF is the symbol. ADM, that's another one. Oh, I have to tell you, the whole agricultural side is just, talk about inflation. This is, we'll do that tomorrow. And ADM is the Archegenic. Dow is now up 5, down 6. Very nice. Second.